The Morgan Report with David Morgan.
David Morgan, themorganreport.com, week ending 1 October 2020. Well, here is the weekly perspective. Let's start on the silver market. It has been an interesting week. Silver was around the 2250 level, dipped down to 2150, and as I'm making this update or weekly perspective, it's back to 2250. Gold also dipped this week. Looks like it's rebounding as well. And it's certainly been a tough time for silver investors as of late, going back a few weeks when we were, in the 25 level, going back a few weeks before that, where we were up in the 28 level. However, we must recall that it took 8 years for silver to get back up to $20. So that's behind us. We're consolidating in a broad channel, somewhere between maybe 30 and 2250, depending how you draw it. But it is higher than it was, again, over that 8-year time frame. So it was the Silver Symposium 2021 in Coeur d'Alene, Idaho, at the Coeur d'Alene Resort and Spa on Monday and Tuesday. Many presenters. And I'm not sure if it's going to be online or not. It was a live event. I don't know how much it was. I know a lot was recorded, and I'm not certain what the procedure or process will be to bring it to the public. I don't think the entire thing would be available, but I'm not sure. Saw a lot of companies, a lot of enthusiasm, a lot of new people, and these silver people generally don't give up. So it was a real joy to be in a live event. It's been a couple of years since there's been a live event, and it's been a while since we've had a silver-only event. And again, I was very happy to participate as one of many. Well, shout out to Rob Goodman, who's the brainchild of the whole thing, and Shauna Hillman, who is behind the scenes, did a great deal of work. She was the original on the original Silver Summit, and just a tremendous effort on her part. Very low key. She doesn't like to take credit, but I will give her a shout out. So I don't have a lot to say this week on the silver market other than what I just said. I do want to bring to your attention a couple of things. One is that a lot of the news this week that's very important is energy. We're seeing these rolling blackouts in parts of China. The UK is, in certain areas, is having a lot of disruptions in their petrol. In fact, it's my understanding that in some areas, even the military's been on board to make sure the supply chain gets there. Or there's a little disruption in the petrol supply to the end users. Another area that's getting a lot of debate, of course, is the debt ceiling. And I think this one's kind of an interesting article. RIA advice. The debt ceiling is a non-crisis and why rates will fall. I'm not going to read this to you, but I think the gist of many of these articles that are, kind of been here, done that type of thing, meaning that we hear every time there's a debt limit approached, there's a lot of rhetoric and a lot of almost fear from the financial mainstream. I mean, Janet Yellen's been writing these letters to the Treasury talking about, if you don't up it, or to Congress rather, if you don't up it, this is what's going to happen. We're going to be in big trouble. And, sounds really ominous if you read her letters, at least what's reported in what she writes. However, I am not that worried. Let's start with the scare tactics. Number one, if Congress doesn't rate the debt ceiling, the Treasury will run out of money. The U.S. will default on its debt, and the market and the economy will crash. Well, there's a grain of truth behind these statements that are largely false. However, for the media, a manufactured crisis should never be allowed to go to waste. And you can go on from the article. I think it's worth probably your 5 minutes to read it. And lots of good graphs, etc. This is from Bloomberg, and I like it. Demand is not the economy's problem. Supply is. Policymakers and central bankers are stuck in a mindset from the last crisis and need to alter their thinking. Coming out of the 2008 global financial crisis, it took too long to recognize that the economic shock was more structural and secular rather than cyclical. The result was a policy response, while effective in dealing with the immediate emergency, proved insufficient for the longer-term economic well-being. Well, it's interesting. That kind of reflects what I've said for a long time, and I'm not going to put too many extra words into what Bloomberg has said here, but I don't think we ever really recovered from the 2008 financial crisis. It was global in scope, and now we're seeing a pretty big contraction in the economy. While the on-the-ground evidence of supply disruptions is multiplying, the dominant macroeconomic mindset is still overly fixed on insufficient aggregate demand. Several of the recent policy remarks by the Federal Reserve once again serve as an example. I'm going to go ahead and end this week with the energy comment again. This is from Al Jazeera. Global energy crunch, U.S. burnout, and OPEC's #1 call. It has been a big, huge week for the energy complex and a painful one for countries that are paying through the nose for it. Global benchmark crude briefly hit its highest level in nearly 3 years this week, and OPEC predicts crude will reign supreme for the next several decades despite a global green energy push. Meanwhile, prices of natural gas and coal, the world's dirtiest fossil fuels, are also soaring. Europe is getting hammered with record natural gas prices, while China, the world's largest producer and consumer of coal, is so energy squeezed it's experiencing blackouts and energy rationing. So have we hit the energy cliff? I don't know. Certainly the feedback that we're seeing shows that it may be here. There's lots of factors. You can't just single out one. But Steve Sanangelo of SRS Rock was pointed out, and many that he has cited in his work are pointing toward an energy cliff. And once that cliff starts to manifest and people understand that there is a limited supply of hydrocarbons available, it's going to be an interesting time. The whole world runs on energy, not on finance. It's the #1 most crucial commodity to everyone's well-being, and we are seeing uncertainty in that market. I'll leave it there. I am back from the Silver Symposium, I said earlier. Again, grateful for everyone that came. And I just want to say finally that I did play a video in that presentation. It was called A Postcard from 1969. I don't know if you can look it up. I think it was on TikTok. And it talked about, in 1969, how things looked pretty bleak. Of course, nothing to do with the illness that we're experiencing right now, but it did have to do a lot with what the scenes were like back in that era. And it really, the ingenuity of the human beings, humanity at large, on aggregate, is rather remarkable. And that was kind of the message of that short TikTok clip. So I'll leave it there. I wish you all the best. I'll be back with you next week with a new weekly perspective. We will be publishing the October issue of the Morgan Report this weekend, and the main editorial will feature an analysis of the mining sector and it being basically very, very cheap. So if you are disposed to want to put some funds into a sector that's very beat up and very unloved and very much on the bargain price level, you might consider that. So until next week, this is David Morgan, themorganreport.com, signing out.